Hey everybody, it's Eric from Let's Start Investing. Today I'm going to show you inside M1 Finance. Like all our reviews, we actually go into a real account that we fund so you can see for yourself what it's like to use it. We're going to go over the pros and cons as well as show you how it stands out from competition. If you stick around to the end, I'm going to show you what I think about my portfolio using the app as well as how it compares to Betterment and Acorns. And I ask before we get started, please hit that subscribe button and notification bell. It helps my channel grow and I can make more of these videos in the future. Also, if you like the video, give it a like. Without further ado, let's go ahead and get into it. Alright guys, so we are inside the account. This is M1 Finance, so I'm going to show you inside my portfolio. Currently, the current value is $374.13. I started this back in August of 2019. It's been about a year since I've had this in here, and I just want to show you my experience with it and what I think of it now. So if you were to start this for the first time, the first thing you would need to do is connect it to your bank. So you go to bank connection, and then you would just set up a bank so that you could automatically deposit into it. That also allows you to pull money out of it as well. So obviously you need to do that in order to even use this app. Next, I'm going to show you the research tab. So now you're ready to invest. You want to know what to invest in or choose things. You can look at the news if you want. I don't actually use this because I don't like investing based on the news. But what I do is I can go here to stocks. I can select my criteria that I like to look for in stocks, and then it'll filter on this side. So there's like 38 different 100 stocks you could choose from here. And then I could also use ETFs and funds. So I have like the SPY, which is your S&P 500 fund. There's Vanguard funds, iShares, all the different fund companies, like their funds are represented here in M1 Finance. So I can choose filters on that as well. I can choose by categories if I want and start building my portfolio. So in M1 Finance, they don't call them portfolios, they call them pies, which basically is like if you added 10 stocks to a portfolio, that would be like adding 10 slices to a pie. So I'm going to show you some expert pies, which I think is probably the most valuable part of M1 Finance. Rather than trying to reinvent the wheel, M1 Finance actually has portfolios that are already made from investors that like that's their job, is to go in there and like start building portfolios. And so rather than have somebody and pay them to do that for you, you've already got them here that you can choose the ones that match your investing goals and risk tolerance. So you can see them here. I'm not going to say like read them all out to you, but I will show you a couple of them. So if I go to just stocks and bonds, this is going to show you some splits. So 10%, 90%, that means 10% stocks, 90% bonds. So it's going to be very low risk because you're mostly involved in bonds, which have low volatility but also lower yield. And then also you can go down to down here where it says 90-10, which is 90% stocks, 10% bonds, and it's going to be a little more medium as far as the risk goes. So it's kind of a little higher than I'd say. I would actually say that it's kind of medium high, but they have it down here as medium. But either way, this is like looking at your time horizon. So the longer your time horizon, you're going to see that 90-10 is gonna perform the best because it's the one that's mostly stocks, and stocks over the long term always outperform bonds. So it's going to be your biggest return. So if you're like using the rule of 100, you could basically subtract your age from 100, and then that's going to tell you how much you should be invested in stocks and how much you should be invested in bonds. So if you're 70 years old, you would subtract 100 minus 70, that's 30. So you'd actually be 70% in bonds and 30% stocks. If you're 30 years old, you can subtract 30 from 100, so that means you should be in 70% stocks and 30% bonds. And that's just a way to manage risk tolerance for people that kind of want an easy way of doing it. I think it's a little conservative. I don't actually ascribe to that really, but that is a common investing psychology, so you can do that here. Next, if you go over here, you can also choose from income earners. That's going to be like your dividend stocks. So kind of neat because you're getting fixed income from those. So if you're into that kind of an investor, then that would be the one for you. And then planning your retirement. If you know what year you want to retire, you could filter and choose a pie that meets that goal. So if I wanted to retire at 2055 and I'm a relatively aggressive investor, then I might choose this pie. And then what that's going to do is every time I put money in this pie, it's going to allow this portfolio to grow, and then over time they're going to start adjusting it to bring down the risk tolerance as I get closer to retirement, so that when I get there, if there was a big market event that caused it to lose value, I would lose less value because it's been adjusting my risk the closer I get to using it. So these are pretty much like target date funds if you were to like have a mutual fund account for retirement, like in a 401k or like equivalent. So that just shows you some of the experts. I'll show you the one I just picked for the purpose of this, which is my big three. Big three is just simply Amazon, Google, and Berkshire Hathaway. I choose these because they're like $1,000 stocks, and I only had $250 to put in this pie. So I decided that using this, I could actually invest in all three of these just to see what would happen over a year, and I can show you that it's done pretty well. So in the last year, it's gone up about 53%. So pretty good for just choosing three companies. And then the best part about it was I didn't have to buy entire shares. I was able to just invest the money I had into partial shares, which M1 Finance is great about doing. So I was able to get into Amazon, Google, and Berkshire Hathaway. You could see where the big 2020 bear market was here for the coronavirus pandemic. And then also you can see that in the last year, it still managed to outperform and do like 53%, which is, I think, pretty good. So going back, I built another one based on one of my favorite services, which is Stock Advisor. And what I did was I just chose the 10 stocks that were being recommended at that time, and I built a pie. I can't show you what each one of them is because it's a paid service and I'm not allowed to give out their secrets. But you can see that it's actually performed over the last year pretty well also. So it's got about 74, almost 75%. So it's actually outperformed Berkshire Hathaway, Amazon, and Google. And I actually do have a lot of these stocks in other brokerages. So, but I don't show them in here because I didn't choose to invest them in this one. But I built this just to show that you can actually make multiple pies and add them to your portfolio. So with one click, this would become part of my portfolio, and I could slowly be investing in this over time as well. So that's another thing I like about it is that you could actually have different goals in mind, such as paying for your kids' college and saving for retirement. Build two different pies, add them to your portfolio, and individually those are going to perform so that you could actually use them for different applications later. So pretty cool service. I do like it. The biggest thing I like about it is there's zero fees, and that sounds like a gimmick, but I'm like, there's no fees at all. I don't pay a single thing. With other services, there's at least some percent of a fee for investing in those funds. Now, like if you're invested in the ETFs and mutual funds, then there's going to be the fees that are unavoidable that the fund charges. But as far as M1 Finance, they're not charging anything at all. And the reason is because they're hoping you're going to upgrade to some of their other services where you can like borrow money. That's a paid service. But if you're just coming in here to invest in a portfolio, then 100% free. All right, guys. So now you've been inside the account. Let's go over those pros and cons one more time. Pro number one, super easy to use. You can use it on mobile or desktop. Point number two, it's extremely customizable. You can make your own pie, or you can use one of the templates that are provided, and there's one for just about every kind of investor like I showed you. Number three, easy to set up different goals. So you can have different portfolios for different goals that you have. Retirement, kids' college fund, you name it. You can have different ones that meet those needs and customize them each to your liking. Next, the fact that you can auto deposit. So you can set it up and forget about it. So every month, every week, it'll auto deposit into whatever portfolio or pie that you like, and makes it real easy to watch it grow. And then also, no fees. And that's really the biggest one. I love the fact that there's no fees. That's really what makes it stand out from its competitors. So some of the cons, there's no tax loss harvesting, which basically means that at the end of the year, some investing apps will sell off your losers. That way, when taxes come around, it shows the losses, and you can reap the benefits for your taxes that way. So it doesn't offer that, but what it does offer is tax minimalization, which basically means that when you decide you want to sell stocks yourself, then it will prioritize the ones that were losers first to make sure that you have the best tax advantage in that regard. So that's one con, but they kind of make up for it. And then the other con is that it's obviously not for day traders. So like if you're interested in trading, intraday, that's not what this is for. This is for long-term growth. So not really a con if you're an investor, but a con if you were looking for a trading app that's similar to this. So hopefully that helps you out with the pros and cons. I told you at the beginning of the video that I wanted to show you what I think about it as far as Betterment and Acorns. I use both. So I use Betterment for saving up for my children so that when they grow up and they become adults, they have money that I'm just going to basically gift them for whatever they need it for. And then I also use Acorns for goals that are kind of around, like, just small goals. So like home improvement projects, it just slowly grows and grows and grows. And if I want to redo my floors in my house, then I just use the Acorns account. It's not really a serious investment for me. It's just something that makes me save very easily. And since it only costs $1 a month, not a big deal. But what I think about M1 Finance is that the fact that it has no fees make it very, very enticing. So hopefully this review helps you out. And if so, like I said, please subscribe, hit the notification button, like the video. Have a great day.